I truly believe that most every business owner's least favorite part about running a business is taxes. But it is a part of every business, so like it or not, you gotta have at least a very basic understanding of how taxes work for your business. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are going to be diving into a topic that makes a lot of boutique owners sweat, and that is taxes. And more specifically, we are going to be looking at the income tax. And I'm just going to apologize up front. I'm kind of getting over a little bit of a cold or something, so my voice is not 100% there. So I'm going to try and power through this, but my apologies if it is difficult to understand or anything. But diving back in, I truly believe that most every business owner's least favorite part about running a business is taxes. But it is a part of every business, so like it or not, you gotta have at least a very basic understanding of how taxes work for your business. So income taxes, you're probably already at least somewhat familiar with this process because you do it on a personal level at some point every January to April, right? So you're at least a little somewhat familiar with the general process of income taxes. However, things do tend to get a little more complicated once you become a business owner. And believe me, I know how these topics can kind of make your eyes glaze over. In fact, my income tax class in college was by far my least favorite accounting class, and I told myself I was never going to get into tax work. Whoops. But I'll try and break this down as simple as possible for you to understand. Most of the boutique owners I've worked with begin their business as either a sole proprietor or an LLC business. Both of these types of businesses are known as what's called a pass-through entity, which simply means that all of the income and expenses from your business pass through onto your individual tax return. This means that you're going to report all of your business income and expenses on a Schedule C, which is just another page that's attached to your personal income tax return. I'll link a Schedule C in the show notes so you can actually see what it looks like. But it's kind of just like a P&L. You record all of your income at the top. You can list all of your deductible expenses after that, and you'll get a net taxable amount, which is the amount that you are taxed on your personal tax return. Also, if you take a look at the Schedule C, there's going to be a lot of different expense categories there that just won't apply to you, but you are able to deduct more expenses than are what is listed on the Schedule C. So if you want a more boutique-friendly list of deductible expenses, you can go ahead and grab a download at my website, findingfreedomfinancial.com/deductions. I'll also be sure to link that for you in the show notes as well. But any of those other deductible expenses that you have that don't show up on the Schedule C, you're just going to group them all together onto the other expenses line on your Schedule C. And then once you subtract all of those deductible expenses from your total income, you're going to get your net profit or loss for the year, and that is what is reported on your income tax return as your taxable income. The next most popular type of business I see for boutique owners is an LLC that has elected to be taxed as an S-Corp. And it's important to know that an LLC and an S-Corp are the same in regards to their legal status and business structure. The only thing an S-Corp represents is that they have chosen to be taxed differently. And there are some significant tax benefits to becoming an S-Corp, but I highly recommend that you work with an accountant to see if considering changing your tax status to an S-Corp would be advantageous to you. I'll link to a blog post that I have that gives a little more overview and insight into what an S-Corp truly is. But for now, I'm just going to say it doesn't really make sense for you to become an S-Corp unless you have maybe, $80,000 to $90,000 of profit to show at the end of the year. So how do taxes work from an S-Corp? Just like a sole proprietor or an LLC, the S-Corp is also a pass-through entity, so all of the income and expenses flow through onto the business owner's their personal tax return. The only difference is an S Corp actually has to file a business tax return first, and it's usually due a month before the personal tax return. So typically personal tax returns are due April 15th. An S Corp business return is due by March 15th. This tax form is known as an 1120S, and I'll link an example of that in the show notes below as well. It looks very similar to a Schedule C. You're going to report all of your income and deductions on this tax return, but instead of that bottom line immediately flowing onto your personal return and being filed at the same time, it generates a document that is called a K-1, and you will use that along with the W-2 that you receive, because one of the requirements of being an S Corp is you are actually on payroll. So you will also get a W-2 from your business showing all of your payroll wages and taxes. And you're going to use those two documents, the K-1 and the W-2, to then file your personal tax return later on. Another type of business that isn't quite as popular, but still definitely an option for business owners, the other business structure is a partnership. Now, if you operate as a partnership, you will also need to file a separate business tax return that is also due around March 15th, and it's called a Form 1065, and I'll link that below in the show notes as well so you can see an example. And just like all the other returns, this form will report all of your business income and expenses. And once that's all complete, it will generate a K-1 for all of the partners that reflect your portion of the business's taxable income. So if there's two partners, you each have 50-50 ownership. It will essentially split that bottom line taxable income evenly between the two of you on your K-1, and then you will use your K-1 to file your personal tax return. If the split is anything other than 50-50, again, that bottom line taxable income will just be split based on your ownership percentage and reported on your K-1 for you to file your personal tax return by April 15th. So that's a very general, high-level overview of how the tax from your business, depending on your entity type, flows through onto your personal tax return. But there is something else that we need to consider here, and that is self-employment tax. So if you have ever been an employee, I'm sure that you are painfully aware how much can be taken out of your paycheck each pay period for taxes. And a majority of these taxes go towards Social Security and Medicare. And you may or may not be aware of this, but your employer is also responsible for matching these amounts each paycheck. As a self-employed sole proprietor, an LLC business owner that is not an S Corp or a partnership, you have the quote-unquote benefit of paying both the employee and the employer portion of Medicare and Social Security tax, and this is known as self-employment tax. And currently the rate is a little over 15%, I think it's 15.3%. So that means that for every $10,000 of profit, that bottom line taxable income that you show, you will be paying approximately $1,530 in self-employment tax alone, okay? Welcome to the joys of being a small business owner. So if you're a new business owner, you might be shocked when you see that first big tax bill. And that's why I encourage all business owners to be saving some throughout the year to help pay for your taxes when this time comes. Now, how much should you be saving for taxes? I get this question a lot, and the answer can really vary depending on your specific situation. Remember, most boutiques are pass-through entities, so all of your personal tax matters come into play, including, how many kids you have, what other jobs you or your spouse may have, what tax bracket you fall into. But as a general rule, I recommend that sole proprietors, LLC owners, and partnerships try to set aside approximately 30% of your profit throughout the year. Remember, you're going to be paying 15% alone in that self-employment tax. And if you're an S Corp, you will be paying in that 15.3% for Medicare and Social Security with every paycheck. So I recommend setting aside the extra 15% of that bottom line profit, setting that aside for the year-end taxes as well. And remember, it's 15 to 30% of your profit, that bottom line on your P&L, not your total revenue, which means subtracting out all of your business expenses before you actually calculate this percentage. That's why it's so important for you to be keeping up with your bookkeeping throughout the year so you can have a better idea of what that profit actually looks like, so you can calculate what that 15 to 30% saving amount should be throughout the year. And if you need a better system to help keep up with your bookkeeping, I want to invite you to check out Bookkeeping Made Simple for Boutiques, where I will hold your hand through this entire process, setting up your QuickBooks Online and using it to track every single penny that flows in and out of your business. You can also learn more about my recommended process by watching the free on-demand masterclass on my website. It's called Make Your Money Make Sense. You can register for it at findingfreedomfinancial.com/masterclass. I hope you found this episode helpful as you start to understand the complicated world of taxes as it relates to your business. But if you have any questions on anything that you heard today, please feel free to send me a DM over on Instagram at findingfreedomfinancial. But that's all I have for you guys today. Be sure to tune in next week for another episode. I'll see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at findingfreedomfinancial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.